Okay, so we have the forecast for US core CPI. So I think it's 8 banks. So you just pick a table, buy, sell, and neutral. Now these are by the banks. So what you do, first of all, is go to your economic calendar and take note of the forecast and the previews so that you understand what you're saying, as well as the retail sales. So the core CPI is predicted for the dollar to have an increase actually. So previous was so we're going to write two things down: YOY and month over month. So the year over year is 4.3% or 4 points. Then we have the months. It was previously 0.1, forecasting 0. An increase to okay, it was previously 0.3, forecasting 0.4. Then the price index as well was previously 0.1, forecasting 0.3. So just take note of this. So we can easily make reference back to it. Okay, so let's start. The Fed preferred inflation gauge, the core personal consumption expenditure, core PCE, will be published today, Friday, and we'll get closer to the release time. Here are the forecasts by the common services of 8 major banks. So let us go straight ahead. The ING. The Fed's favored measure of inflation, the core personal consumption expenditure deflators, looks set to rise to 0.4 month by month, more than twice the 0.17% required over time to produce. So ING is saying they want to buy. So you mark it down. ING is saying they buy, and they're expecting it to actually rise to 0.4%. So the next bank, we have to wait until Friday for the main event this week, as the latest core PC deflator DB at plus 5% month over month, then plus 3% last month come out. If our forecast for core PC is correct, the YOY rate will be sticky at 4.4% and could edge to 4.5% with the 3 months 3.9% versus 2.9%. The 6 months 4.6% and 3% annualized growth rate. So second bank is saying buy. Okay, well, the next bank, we penciled in gain for PCE of 0.5% month over month for headlines and 0.4% for core. Some of the street estimates plus 0.55% for core, which could take the annual rate to 4.5% from 4.4% in December. The outcome, we decide how the second half of the month pans out, and if bugging speculation of 50 basis point in March is simply outlandish or not. With the same buy again, TDS. We expect core inflation price to accelerate in January to its strongest month-over-month pace. 5 months. We project January core PC inflation to have accelerated to 0.5% month-over-month, driven by a lessening in core goods price deflation and strong cost service inflation, also outside of housing services. So the year-over-year rates likely stayed unchanged at 4.5%, suggesting price gain remains elevated. With also strong gasoline price, January headline PC inflation likely ended up at. This bank is also saying buy. NBF, still in January, the other core PCE deflator may be moved down from 4.4% to a 15-month low of 4.3%. Okay, so MBF is saying sell. They want to sell down to 4.3%. Okay, CIBC, the Fed's preferred gauge of inflation core price, likely maintained the 0.3 monthly pace, slightly lower than the CPI counterpart, given the lower weight of shelter in the index, causing the annual rate to subside to 4.3. Okay, so CIBC is saying sell. They want to sell down to 4.3%. Citibank, they're not the biggest bank in the US, so their opinion matters a lot. So we expect a strong 0.5% month-over-month increase in core PCI inflation in January, with upside risk of a print from around 0.6%. This will imply core PCI rising to 4.5% year-over-year from 1.4%. So Citibank is buying. So we already have 5 banks buying. So okay, we have Credit Suisse. We anticipate an above census acceleration in both headline and core PC from 0.1% month-over-month and 0.3 month in December to 0.6 a month-over-month, especially. We've realized this readings will be seen as reinforcing hawkish Fed policy risk, and on the margin might bring further weight to the scenario of 50 basis point hike in March. At the same time, weaker than expected readings will represent a more substantial surprise relative to now more hawkish census, and as such needs to be considered as a tactical tail risk. That said, we expect that the bar for downward PCE surprise to trigger an actual challenge of the recent shift in Fed policy expectation is very high. A particularly weak data surprise will also likely lead to speculation about possible technical reasons behind it, which might undermine its credibility and ultimately market impact. So these guys are saying buy. So we have 2 banks saying buys, and just 1 saying sell, 2 saying sell. So that said, I think all my bias for the dollar sell today has changed. I can no longer sell the dollar. It's as simple as that. So might be seeing a crash in Euro USD testing 1.05 today, and a further up gold might finally want to drop to its final destination, which is 1800. USD might just push to 0.94. USD card might test 1.36, clearing everybody's stop loss out. Okay, NZUSD might just drop to 0.605. That will be hard. Okay, but they're already selling actually. AUD might drop some more. So if you are on any dollar pair selling it, I think you might want to take out your profit. If you're in profit or if you're in loss, just close. Yeah, maybe you could wait before the news is by 2:30. So I think the market might just range till that time, possibly when you took profit. So once you see any profit, just close, because the downside might take precedence. So euros might continue to sell today. So any question? I think it's clear. Now the problem is only 3 persons joined this call.
It's very clear.
Yeah, only 3 persons joined the call, but it's fine.